Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Friday, June 12th, 2020. And our top stories today, the key to economic recovery and potentially a new option for your 401k. Well, joining me now is Devin Banerjee. He's Senior Financial Services Editor for LinkedIn, and he's also the editor of the This Week in Finance newsletter. Devin, thanks so much for joining us on the program this morning.
Absolutely, Jeff. Always good to be with you.
Yeah, it's great to see you. Lots of news this week. Lots of things going on. I know one of the things that was really piqued your interest and the folks, the over 600 million people in LinkedIn, was the key to economic recovery. And I know that's top of mind for myself as well.
Absolutely, Jeff. It was really a busy week of economic updates. One of those weeks where we hear from several important figures, including Federal Reserve Chair Jay Powell, Steven Mnuchin, the Treasury Secretary. So I'm going to start with just a download of what we learned this week and how their remarks have evolved over time. So on Wednesday, the FOMC released its minutes from its most recent meeting. Fed Chair Jay Powell held his press conference, really sending a powerful message that the central bank will continue pumping stimulus into the U.S. economy until this traumatized labor market has been healed. He said, quote, "We're not even thinking about raising rates." They are so early in their thinking there that they're not even close to thinking about it. And he's also said, quote, "We are strongly committed to using our tools to do whatever we can for as long as it takes," end quote. So if you remember about a month ago, Jeff, you and I were kind of trying to read the tea leaves of what he was trying to say and how committed he was to this zero interest rate policy and this stimulus program going forward. He's now being very, very clear as day, as to what the Federal Reserve's plans are regarding stimulus going forward. The FOMC also saying it will, as I said, increasing stimulus, increase its holdings of treasuries and mortgage-backed securities at least at the current pace. So not even slowing down on those asset purchase programs and the expansion of its balance sheet. I tuned into the press conference. Some really interesting questions, including from Mike McKee of Bloomberg, who really came out and said, if you remember what the markets were doing on Wednesday, quite a strong rally. And Mike McKee of Bloomberg asked Fed Chair Powell, are you concerned about stoking an asset bubble that will turn around and bite investors across the board and then hinder the economy again? And Powell pushed back quite strongly on, whether the intent was related to the markets or to asset prices. He said they're focused on the Fed's dual mandate, of course, full employment and stable prices. Last update from the Fed, all FOMC members, how they put out their forecasts using that dot plot. All of them expect the benchmark rate to remain near zero through the end of 2021. And all but two of them expect the Fed funds rate to remain near zero through 2022. So again, reinforcing that idea that this will be probably a 3-year recovery from this pandemic-driven downturn.
Yeah, really important, really information. And I'm actually interested in, and I don't know if this is a topic that we need to talk about here, we probably talk about later, is how they arrive to a quorum, or how they get to a consensus, I guess. I mean, I think it's fascinating because there are 12 governors and the chairman, right?
Yeah.
And so they have staffs, and how do they arrive at that? Really interesting. But, I think make some really interesting points. I think the thing that I'm thinking about this week, Devin, also thinking about the market and thinking about the economy, is thinking, how do we get the people at the lower end of the spectrum back to work? They were significantly and are significantly impacted by this virus. I mean, we've talked about it ad nauseum probably at this point, but really important. Got to get those people back to work. Got to get them earning a living, having jobs. I'm not sure this is necessarily a topic for the FOMC meeting minutes, but that to me is top of mind. Really important.
Absolutely. It's certainly been top of mind for members on our platform on LinkedIn. We have a lot of small business owners and operators trying to give and get help during this period. So another news item that we feature that was quite popular this week were some updates from the Treasury Secretary, as I mentioned at the top, Steven Mnuchin. He on Wednesday appeared before the Senate Small Business Committee with some updates about the Paycheck Protection Program, which has really been a key part of financial assistance for small and medium-sized businesses during this pandemic and this downturn. Many owners have been confused about when their loans are converted into grants, what the conditions are around that, and we've seen some really interesting reporting in recent weeks that some of these concerned owners have returned their PPP money so as not to have a loan on their books going forward. Some are even foregoing even applying at all because of this confusion. And Mnuchin on Wednesday said the PPP program, in fact, still has $130 billion remaining because the applications have actually slowed. So some updates from his appearance in front of the Senate. He expects most loans to be forgiven. He said they're also easing some guidelines around, for example, small business owners who had been convicted of a felony within the past 5 years had not been able to apply. They're easing that window to the past 3 years. And Mnuchin also, most importantly, signaled that another round of stimulus is being drafted, specifically targeting those industries and small businesses that are struggling to reopen right now. So some important updates there, and we really saw a lot of interest from our small business owners and operators on that news development.
Yeah, and we did a story on Monday with Paula Fargo from Curry Printing, who had a lot of difficulty getting a PPP loan. She's got a small printing business based in my hometown of Baltimore, really having trouble. So hopefully, again, this is not going to be a perfect system, but hopefully those things can be worked out over time. Devin, just real quick for the, just as we're kind of rounding out this segment, the market had a really good run, I guess, early part of the week, kind of receded a little bit. And we're recording this on Thursday, well, your morning, my afternoon. So I haven't even checked the market this morning. But any thoughts in terms of what we can expect either from Secretary Mnuchin or not Treasury Secretary, Chairman Powell? I demoted him over the course of the next week or so with respect to markets. Yeah,
I would just say one of the most interesting conversations I saw this week unfolding on all social platforms and on LinkedIn as well was just this unprecedented nature, and of course that word has become overused, but this unprecedented nature of the Fed's posture, actions, and how it's posturing itself going forward. Some of those quotes I read at the top of the segment being clear as day that it will do whatever it takes to continue pumping stimulus into this economy. And what that means is, and of course this is one argument, there are people who argue the other side, but what many people argue this means is there is a price insensitive buyer of assets out there, the Federal Reserve, that will, again, do whatever it takes. And the knock-on effects mean that, it may impede the flow of capital away from structurally, fundamentally bad business models, unfortunately, that are kind of revealed during a period like this as the tide goes out, and impeding the flow of capital from those businesses or assets toward, higher quality businesses and assets. And so there's a really passionate, interesting conversation going on among much of the investment community that capitalism itself is being changed, and the functioning and structure of the markets and the flow of capital is really being changed in, some people say a negative way, some people say in a positive way, but fundamentally it's being changed during this period because of the Fed and Chair Jay Powell and these really unprecedented measures they're taking.
Yeah, that's certainly very interesting to watch when if you just exclude some of the, obviously the negative effects, things going on. And I can see why you and the team at LinkedIn really love covering this stuff. Devin, we're going to go to a quick break. When we come back, a potential new option for your 401k, 403b, or governmental 457 plan. Stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Devin Banerjee. He's Senior Financial Services Editor for LinkedIn, and he's also the editor of the This Week in Finance newsletter, which, of course, you can find on the LinkedIn platform. Just click under Devin's name to find it. Devin, thanks so much for sticking around this morning.
Absolutely, Jeff. Happy to.
So we went from the market, lots of turmoil, but the Fed is committed to making things very stable for us as we kind of go through recovery. Now let's turn to retirement, Devin, and it looks like there's a potential for a new 401k option. What can you tell us?
Yeah, Jeff, and this did happen last week, but we at LinkedIn wanted to gather a lot of reaction to the story before I brought it to the segment to discuss. So on June 3rd, last Wednesday, the Department of Labor issued a information letter on private equity investments and defined contribution plans like 401ks and the others that you mentioned. And what they said is that under the Employee Retirement Income Security Act, or ERISA, which governs retirement plans in the private sector, plan sponsors or companies that sponsor plans like 401k can fulfill their fiduciary responsibility while offering a private equity investment option in their 401k fund lineup for employees. So that might have sounded like a lot of mumbo jumbo, but it's a real shift in what plan sponsors, companies that offer these retirement plans to employees, a real shift in what they can offer in their plans for employees, which historically to date have been equities and fixed income options and a blend of those two. So I'll get into the real big implications and trends this fits into, but a couple of nuances first that the Department of Labor made clear. One is these cannot be direct investments in private equity. So through my 401k, I'm not directly buying a piece of Blackstone's latest private equity fund or Apollo's latest credit fund or KKR's latest infrastructure fund. The DOL, the Department of Labor, says through diversified multi-asset class vehicles like target date funds or balanced funds or target risk funds, this can be appropriate. And it's not just that. Of course, the plan sponsor has a fiduciary responsibility to evaluate all other characteristics like fees, complexity, which I'll get into that complexity piece, disclosures, liquidity and valuation are very important. 401k plans, for example, are meant to have daily valuations, daily liquidity options, moving in and out of funds in the lineup. But private equity funds typically are valuing their assets on a quarterly basis. They're locking up money for as long as 10, even 12 years sometimes. So that those characteristics also have to match for this to be applicable. So stepping back, a lot of trends here going on. Number one, this is part of this real deregulatory push by this administration. In particular, you and I talked, I think last year, about some moves by Jay Clayton, the SEC chairman, around, he was seeking public comment around whether the definition of accredited investor should be altered to allow more kind of mom and pop investors or more of Main Street to access investment options that are just available to institutions basically right now, including private equity, venture capital, other private assets. So again, this is one part of a big deregulatory push. Number two, for the private equity industry, which has grown in leaps and bounds. I mean, this in the whole decade I've been covering, past decade I've been covering this industry, this has been called the holy grail. I mean, right now there are north of, I think, $6.2 trillion in 401k assets. Now, of course, because 401k plans wouldn't be investing directly, I mean, they would just access a piece of this through diversified funds. So Evercore is estimating about $400 billion, the opportunity for capital for the private equity industry through these 401ks. And then number three, I'll just mention, as I said, we gathered reactions to this over the past week on LinkedIn. We had about 6,000 votes on a poll. Now, of course, this is not some statistically significant poll. It was done for my profile, and my followers are predominantly in financial services, but 38% of them saw this as a positive development for the retirement saver. 19% saw it as a negative development, so twice as many saw it as a positive development, and about 40% said it's just too early to tell. And anticipating your question about what some issues people saw with this and positives and benefits, people said, look, definitely diversification is a positive here. Having more options for an investment plan that lasts 20, 30, 40 years is really important. Yes, there is the potential for higher return. If you look on a median and a mean basis, yes, private equity over 20, 30-year time periods on average delivers higher annualized returns. But what's really important here, and the nuance that a lot of people pointed out, is manager selection is so important. The dispersion between, top quartile managers of private equity funds and bottom quartile managers is really, really large. I would encourage people to look at that data. So the plan sponsor or the fund, the entity designing the target date fund, for example, which managers they're choosing to allocate your capital to is super, super important. And the last one I'll just mention, Jeff, you can tell I'm really interested in this topic.
Yeah, it's a good topic. Great topic.
Complexity is really important. We saw a lot of people commenting on this story on LinkedIn saying it's difficult right now for many, if not most, participants in 401k plans to even understand the equity and fixed income options available to them. How are they going to understand this additional option? So, Jeff, you're the expert here. I'm just curious if you think this is a development.
Well, I certainly think it's a development, Devin. Thanks for, all great points. And I don't think it's good nor bad. I think, this is obviously something that is another addition to things that trustees or fiduciaries need to consider. Look, when you look at some of the largest pension plans out there, and we've talked about this ad nauseum probably for the audience perspective, but they all have access to these private market investments. So not just private equity, hedge funds, direct real estate, commodity funds, things that I probably don't even know exist, right? So this is the opportunity to bring that in. I will tell you that along with this development comes the responsibility to evaluate whether it makes sense for your plan. And where I can really see this fitting in, Devin, is in those larger plans. Look, I don't think that the off-the-shelf products, and I could be wrong, I don't think that and there are like 50 different brands of off-the-shelf target date funds today. I don't think that, and for logical purposes, I don't think that a big brand manufacturer, the top three, T. Rowe Price, Vanguard, Fidelity, and I'm not going to put words in their mouth because I've not talked with them on this, but I don't think that they're really going to supplement their asset allocation, at least at the onset with this. But I do think that those plans that are large enough, that are in the $1 billion plus range, and have custom target date portfolios, have the flexibility, have sophisticated consultants and advisors, because you talked about manager selection. Who's going to help you with manager selection? You need a specific expert in this area to help you with that. So I think there's great opportunity. I like access to all markets. I like diversification. I just want to make sure that it's done prudently.
Absolutely. That's a great point, Jeff. And I found this an interesting development just because how long it's actually been in the works. And an interesting tidbit for those who follow Jeff's and my conversation, the first time I remember meeting Jeff was at an event about this very topic. I think it was 2013, held by a firm called Pantheon Ventures, which is one of the first designed some of these sleeves, custom sleeves for target date funds that access a pool of other private equity funds. And so since 2013 at least, but even a couple of years before that, this has been such a discussion and an undercurrent in the private capital sector at large.
Yeah, I think you're right. I remember that lunch meeting, sitting there and listening to it. And it just shows you how, here we are 7 years later, a little under 7 years later, how long it takes to get there. But there are a lot of groups working hard, and it's not just advocates for private equity or private real estate or other illiquid investments. It's people within the industry as well, because I think all people recognize diversification is key. And again, I don't think we're even talking 10% here, Devin.
Yeah.
I think we're talking about under 5% allocation in the target date fund.
Right.
So you're still going to have predominantly public markets, stocks, bonds, et cetera.
Yeah.
But it just is very interesting to watch. And, back then I probably had a little bit more hair than I do now, which I have none. But yeah, it's interesting to watch how things develop. And I just wish that we could develop things a little bit further, because there's a lot of things that need to be done in the retirement space in terms of getting more people to save.
Yeah, absolutely.
Well, Devin, always a pleasure chatting with you. Really great topics this week. Have a great weekend, and we'll talk to you again on the podcast on Sunday.
Take care, Jeff.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. Don't forget, tomorrow we're back with BRN Weekly. We've got a very special interview. You're not going to want to miss it. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.